at how currencies are currently trading. Well, as mentioned earlier, U.S. services group Marsh & McLennan has acquired the brokerage unit of Alexander Forbes. And joining me at the desk this morning to give us more insight into this deal is Edward Kieswetter. He's Group Chief Executive of Alexander Forbes. Thanks so much, Edward, for joining us this morning. Well, we've got Alexander Forbes having agreed to sell its brokerage business off to U.S. group Marsh & McLennan companies. Big question, why?
I think it's important that this deal was initiated by management. And what triggered it was the changing landscape in South Africa and how we could create greater value for our clients based on feedback from the clients. And what it really brings is, from a client service perspective, being able to provide clients with the best of our local market knowledge and the excellent relationships we've built over the years, but also then enriching that with the global expertise that a company like Marsh McLennan would bring.
So let's take a look at this relation or not, because this transaction doesn't only affect the parts of your businesses in South Africa. It's those correspondent operations across Southern Africa that also get affected. So how do you see this relationship working at this stage and the one company leveraging off the other?
I think first of all important, we see ourselves as an African company rooted in Africa with global aspirations. And therefore, for some time now, we have looked at how do we deepen our reach into Africa and provide the expertise that we have in South Africa into the African market. We already currently operate in 11 African countries north of South Africa. And naturally, to bring that scale to bear, in addition to the expertise we have, Marsh equally has an aspiration to build a business into Africa. I think so this joint aspiration with the collective capability that we bring, we believe is really a great positive step.
Of course, what this transaction does is it highlights again the interest in growth opportunities on the continent itself. I mean, has that appeal fetched a high enough price tag in your books? What exactly are we looking at here? Because there's an initial consideration of 808 million rand, but that may increase further down the line.
Yeah, I think the way the deal was structured was the initial consideration, which is the base price really, and that's based on the evaluation that was done. Clearly, as a very confident seller, we believe that there was significant upside, and therefore we really back ourselves by having agreed to an earn-out component that will be added on top of the price based on our view of the future. And therefore there's a maximum opportunity for us to earn another 300 million, which really gives you a potential deal size of 1.1 billion. And we are confident, and we're going to try hard, management team, which is the same management team that runs the organization at the moment, to drive the value for our shareholders. And ultimately there's huge symbiosis with management driving their own interests, because clearly they are focused. And both the acquiring and the disposing company on both sides looking for maximum value.
So that 1.1 billion, which is your maximum value, would be dependent on specified revenue, operational, and then strategic performance targets moving forward as well. That's how you're going to
over the next 2 years, yes.
Absolutely, 2 years. Okay, so when are you hoping for things to be finalized here? And are you anticipating any hurdles down the road?
No, I think we have, apart from the normal conditions precedent to financial closing, which we believe we'll work through, we're confident that subject to the approval by the Competitions Commission and other authorities, we'll be able to reach financial closure in 3 months' time.
Of course, you highlighted at the show that, this comes on the back of a very changing landscape in South Africa. We've seen, the risk management firm Aon acquiring risk advisor Glenrand MIB, and that pretty much triggering or getting this ball rolling. Your assessment of this changing landscape and your position within the sector moving forward?
I think, first of all, a couple of quick things. Alexander Forbes group of companies have really traditionally been built off the back of business-to-business relationships. And to some extent, we hold leading market positions in those sectors, and therefore growth to that extent would be reasonably constrained. And therefore, we believe that by diversifying our portfolio of companies into the retail sector, we can unlock additional growth. So what this deal does for us is that it helps us, in addition to creating the wonderful value for clients through the merger, it also creates wonderful opportunities for our employees in that business who now work for a global company. Thirdly, vote for South Africa, because here's an international investor making a vote of confidence in South Africa and also in Africa. But importantly, from the perspective of the organization and the shareholders, we believe we can now refocus our growth strategy, which is primarily into the retail space, where we want to sell to individuals the suite of products and services we have. But also we can refocus our business in Africa in the financial services sector, which is a core competency that is yet unleveraged in Africa.
Absolutely. Well, we'll be keeping an eye on that progress. Thanks so much, Edward, for joining us in studio this morning.
Thank you. It's a pleasure.
Edward Kieswetter is Group Chief Executive over at Alexander Forbes, and just providing us with further insight into the latest transaction that's hit corporate South Africa. It's just a few minutes to go before the JSE opens. Let's take a look and see how JSE sectors traded yesterday as we enter the new trading day, new trading month as well.